Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to the What Matters podcast. I'm Mike Mershazadeh, and I'm here with my co-host, Ashley Ward. And today we have our esteemed guest, Ted Halpern. Ted is the president and founder of Halpern Financial. He founded the company, I believe, all the way back in 1991. Ted, I'm going to get off topic here for just a second. I'm also a twin, and I had done a little background on you, and I hear that you have twins yourself.
I do. I am blessed to have twin children, boy and girl. My wife is very efficient.
How old are they?
They are just entering their junior year of college. They're 20 years old and soon to be legal age in college, which is another concern, but we'll be fine that day.
Wow. Well, let me get into my first question here. My first question here is your origin story. How did you build your RIA? If you can share some of the inspiring journey behind building your RIA, I would love to start off with that.
Yeah, I appreciate it. So I'll make this as quick as I can. But I was with Anderson Consulting. And I really just, it was a great company. I was about to be assigned on a very long project. They promised 18 months, which in consulting terms really meant 3.5 to 4 years. And it was in an area that I just didn't want to start my life. So I left them, and I was always really, really interested in investment management and particularly dealing with clients, not just on the investing side itself, but really working with clients on financial planning issues. And at that time, because I'm so old, you had to be sponsored by someone to take these tests. So I went with a group that I thought was pretty well balanced, that it was primarily insurance, but also did investing. I knew I did not want the insurance end at all. And they sponsored me to take the exams. I got examined up as fast as I could. Within about 10 months, I'd passed every required thing that I needed to get licensed. And then I left them and looked for the largest at that time that I could find that was really as independent as possible, a broker-dealer. You remember back then, that's really the path you had to go.
Yeah.
And I started there. After about 9-10 months, I get a call from them, their compliance department. This was a Friday afternoon, and they said, "Hey, Ted, we have a problem." I said, "Oh my God, what's that?" And they said, "You're selling away." And I said, "Well, that sounds terrible. I have no idea what that means." And I had started this program with Vanguard, and they said, "Listen, we don't have a sales relationship with Vanguard, and we never will." And I said, "Well, I'd prefer my clients not pay commissions." And they said, "Well, we're not going to have a sales agreement with Vanguard." And I said, "Listen, I understand. Let me think about this. I'll call you Monday." And the guy kind of laughed, and he said, "Listen, you can call me Monday. It's late on a Friday, but nothing's going to change on our end." And I called him Monday, and I said, "Listen, I thought about this a lot over the weekend, and I really did. And my decision is I'm going to leave you guys." And that's what made me open up my own RIA. I was always committed to the idea of what is now, the fiduciary fee-only aspect. And that early on was always the path I wanted to go. So I'll tell you, I was not a breakaway broker. I was on my own, sadly not from an overly wealthy family. And I ate Cheerios for a little while, basically.
Yeah, well, that's the entrepreneurial spirit, isn't it? Right?
Well, it helps when at that age I didn't have twins. I wasn't officially married yet, and there was a bit of a fearless nature. So that helped.
Most
definitely.
Yeah,
mine was. I was like, mine was Subway sandwich. I had the $5 footlong every day for about 4.5 years, and still to this day, I will never go to Subway.
Right, exactly. I know what you mean. It was a rough stretch. I lived on some of those credit cards they used to mail you back in the day where, if you just called them and activated, you had like $600. So I thought that was great.
There you go. Yeah. So speaking about that entrepreneurial spirit, what are some of the most valuable lessons that you learned along the way of your career, from leaving that, starting your own firm? Um, any valuable lessons that you can share with our audience?
Yeah, I'm happy to. And, first of all, I'm an avid reader. So I read a lot of books by successful people, and that helps. But really, the beauty of this business, and I'm sure you guys would agree when you talk to people all the time, and even in your own careers, the beauty of dealing with wealthy people is really talking with them, getting to know them, hearing their stories. So I will say so many of the inspirations that I have come from existing client relationships and really getting close enough to them to really hear their story and listen. And there's so much value from that. But early on, I didn't have those relationships yet. And I will tell you one thing that really came across my mind. I won't go into too much detail about the situation, but it was an uncomfortable situation I was put in that I didn't realize I'd be put in. And I had done some work, some audit work for someone, and I was showing it to them. And I was really nervous. I was really anxious. And it was because this was kind of thrust upon me last minute. And I went through the meeting. I did the best I could. I had nothing to hide. I was just exposing some of the problems with some partners this group had. And afterwards, I had this terrible headache. I mean, just awful. And I was about to jump on a plane and fly home, and it was really freezing cold where I was. It was just classic travel and comfortable, right? I don't want to give away the city, but it looks like a cold and flu commercial regularly there. So I go into the bathroom, I wash my face, take some headache medicine, and I'm like, all right, Ted, you got to make a decision right now. Do you want this type of life or don't you? And what dawned on me is an expression I've heard in a number of places being used, but at the time I thought I had come up with it, but I'm sure I heard it somewhere or read it somewhere. But it was, if you want to be successful, you have to be comfortable being uncomfortable.
Right.
And I have always believed that. In fact, I preach that to my kids all the time. If you want certain things in life, if you want to achieve beyond certain levels, you really have to be comfortable being uncomfortable. And what that really, to me at least, means is at certain points, you really have to push yourself to do things that maybe you ordinarily is out of your comfort zone, right? You have to force yourself to take certain exams, force yourself to read all these books, force yourself to get engaged, force yourself to do things that honestly you'd surely rather not. And I think that's why the vast majority of people don't succeed as an entrepreneur, is because at a certain point, complacency is a cancer. And
Right.
and they just don't, they're no longer challenging themselves to be comfortable being uncomfortable. I do that regularly. I challenge my team all the time. Ask yourself, when was the last time you made yourself uncomfortable in business, right? I think another thing that helped tremendously is I've always been open to the idea of I can't do this myself. So I am blessed to have the team I have. They truly are my second family, and they're really talented people. So hire help and hire smart help. And then I'd say, continually try to optimize things. One thing that I look at from just a time standpoint is I always think of my week ahead as I have 10 sessions available to me, a morning and an afternoon times 5 days a week. And I think about, well, how do I want that week to look? I don't know about you guys, but on Monday, everybody gets the Sunday scaries, right? It starts when you're a little kid and school's about to start again from the weekend. So I always thought to myself, well, I'm not going to have meetings on Monday except if they're internal office stuff. And that allows me to kind of get a lot of work done that needs to be done and meet with my team. And also Friday afternoon, right? I mean, no one wants to have a meeting on a Friday afternoon. So, I'm the same way. So I kind of look at it, well, okay, there's 7 sessions to really work with and focus on growth and try to allocate your time so that you can optimize that schedule, those 7 sessions. And I think the idea of having, a very good team, really defining what is the work that needs to be done and challenging yourself to always avoid these false busies. And I think by dividing your time, you can do away with some of those false busies. As an entrepreneur, just entering things in QuickBooks, you could easily justify to yourself that that's a must that needs to get done, right? But honestly, if we do that as a business owner, you're going to waste valuable time every week. So instead, that's really a weekend activity because it's going to interrupt with growth. during one of those sessions. So, I'd say those three things were really big drivers for me, and have helped. And I've tried to embark those on my team. And also, um, really, what is it you want your life to look like? And in order to get that, it's going to take a level of effort.
Right. And I like what you said there because, where it stands, you stated that life begins at the end of your comfort zone. And I guess, would you attribute to that as the secrets to your success? I guess I'll ask here, what are some of the best kept secrets that you have in building your firm?
Yeah, I always joke with people that, a lot of the people on my team, with the exception of maybe two or three of them, we're kind of the introverts, right? Um, and as I joke with my wife, I want to be invited to every party. I just don't want to go to them, right? So it's a
Right.
classic kind of introvert model. And I think if you recognize your program that way as a business owner, you got to figure out how to drive yourself, how to compel you to achieve these things. So a few different things that I do. One of them I really have to give my mother credit for. She was a substitute teacher later in her life, and she used to come home and I'd say, how was your day at the substitute? And I was a kid then too, and she'd say, well, it's always easier if the teacher has what she called a snow day manual, right? If there was a manual as to what is the lesson plan for that day, where'd you leave off, what's to be expected, what do we achieve today? The class would behave, she'd have a really productive day and felt like, she made a difference and it was good. But when there was no manual, it was mayhem, right? Everybody misbehaved, they couldn't get things done. So I kind of took that idea to my business and we created a real process-driven manual. So every task really has a defined process. And we help really decide, what members of the team are kind of on what pillars, if you will. Let me back up. When I say pillars, what I mean by that is really, if you think about the investment advisory business, there's really four different columns to it, right? There's investment management, there's planning, operations and client admin, and then I'd say practice management. And of those four, your team members are going to kind of gravitate towards one or a couple of those. We've been very careful to define our processes, define procedures, continually revisit them. When we hire new people to our team, we ask them, during the training, when they kind of get the scope of the lay of the land, what are some things that you see that maybe we could do better? What are some steps that you see that we don't have to take? And it's because it's funny. After a while, we all drink our own Kool-Aid, right? So having a fresh set of eyes on those processes and procedures, I think is incredibly helpful. But really importantly, is each team member, if you ask them, hey, listen, what are the 8 to 10 things you kind of do over the course of a month, any given month, and they start to list it out. And then you ask them, well, what do those items make you happy? What of those really kind of bum you out and you'd rather not do? And what are some that you really don't care about? And we've done that exercise by surprise to everybody on the team. I'm the one that does it. I enjoy doing that and hearing about them, because what people don't realize is what they might view as a task that they don't love doing might be something that someone else on the team loves.
Right.
Right. Yeah.
I can't imagine being a dentist, but there are people that enjoy it, right? So we've tried to really help the team members develop in a way where there's no limit to their career. We don't put a ceiling on them, and we encourage them to really gravitate towards one of those four pillars. Just as I try to avoid false busies, as I mentioned earlier, I think it's really important for a business like ours or any small business not have too many Swiss Army knives on the team. You can't have people that are generalists across the board. It's good to have one or two of those, don't get me wrong. And I have a couple of those. But generally speaking, we sort of specialize. And I think that has been enormously helpful for us in defining some growth and really kind of focusing on that area and what could be improved, what needs some money invested towards it. I think involving the team is critical. I think too many times our industry, it's built by a few breakaway brokers get together, right? And these people then kind of bring maybe an assistant or two they had with them. And it's a bit of a lopsided business as far as I'm concerned. Don't get me wrong; they might have more AUM than us and a better golf handicap than I do for sure. But I don't think that's the right pyramid, if you will, the way it should work. Right? You got to focus on client experience first. I think my job, I focus a great deal on the investment piece and also the obviously practice management. I enjoy that piece of it. So for me, I kind of look at what is our company's intrinsic stock price. And my job is to try to improve that stock price every quarter as if I worked for a publicly traded company and I had to meet with a whole group of press to explain what are our results. And I think if I look at my job like that, I then really count on team members to help drive that value. And that tends to work quite a bit. So I would say, to summarize, that our best secrets are to make sure that the team is free to roam, is encouraged to, frankly, and develop, and we invest in them. And then I think the idea that we process drive everything. And then focus on the stock price of the business. Is it really doing what it's supposed to do?
Right.
Ashley, before you get you're getting to your next question there, I was going to say, the two of you do have something in common there where, you said you like to be invited to parties and you don't like to go to them. I just moved into a new house, right? And I had a housewarming party this Saturday. Ashley left Friday because she said she had to go get a new outfit for my party on Saturday.
Yeah.
And
oh,
never
goodness.
showed, huh?
A big fat no-show.
Yeah. Listen, Ashley, I get it.
Maybe I'm an introvert. Yeah, I always consider myself an extrovert, but
well, I think introverts that are in business, and you included, right? I mean, you have to be able to turn that on, right?
Right.
And be able to kind of be on stage when you need to be. But truth be told, sometimes there's just too much going on and you'd rather take some alone time.
Absolutely. Yeah. And sometimes that takes a while. I feel like I recently learned that about myself, Sometimes it's better to maybe not enjoy all the fun things and, take that time alone to recharge your battery.
It doesn't hurt. It doesn't hurt. Actually, it's needed. A recharge is good.
Absolutely. Yeah. So, I was going to ask you about lessons you've learned from being a leader and your leadership lessons to share, but it sounds like you kind of went over that. You've learned a lot from driving innovation. Has there been any experiences in your life, possibly mentorship experiences that really were influential to you in your career as a leader?
Oh, absolutely. And that's where I'd really go to what I was mentioning earlier. We have the pleasure of working with wonderful people as our clients. We really do. I'm not just saying that. They're great people. The beauty of being the way we're set up in business, we can say no to people we don't particularly want to take on and engage and get to know further. And then the ones that we really enjoy meeting with and have an interesting background and are really open to sharing. You guys know this. Successful people are really open to discussing how they became successful.
Yeah.
So I ask all our clients all the time, tell me some of the things that really motivated you. What drove you? Some of the questions you're asking me, what were some tricks you did to pull yourself through some challenging times or deal with challenging people? I love hearing that stuff. And frankly, people enjoy talking about it, particularly people that are near retirement or recently retired. That reflection moment, I think it's healthy for them to share. Frankly, you're doing them a good thing by asking.
Right.
But in addition, listen, successful people can share a tremendous amount of that. And I think reading some good books, and again, I would say I can't emphasize the team enough. Us all sharing our experiences and meeting regularly enough to review that, I think is essential for continued success.
Absolutely.
Yeah. And let me ask you this: what do you think the future of wealth management holds? What do you think it looks like if trends, technologies, some strategies that are shaping the industry? What's your opinion there?
It's an interesting thing, this AI craze that's come out, right? And I think it's exciting. I mean, I think it's fun for us. All of us have probably used it to some degree. There's no question I think that will have a significant impact. But I always caution people. You know, the articles that we see out there or conversations we hear about how AI will replace investment managers going forward forever. Not even necessarily the people that do what we do, but investment managers, you know, like the Goldman level, the JP Morgan level, things like that. I always remind people, you know, I remember when TurboTax came and all the discussion was, well, you don't need accountants anymore.
Right.
Now accountants use that as a software tool with their clients.
Right.
So I would
Yeah.
imagine AI will play a role similar to the way that other technology has played roles, right? It used to be thought of that the moment mutual funds came out, brokers hated those early on originally, right? Brokerage houses did. They thought it was awful to use that. You got to use somebody to pick your stocks, not just these tool, you know, teams of people. And then when ETFs came out, mutual funds bought that. Now they offer them, you know, within their own households, so and with their own companies. So I think change is constant. And frankly, I think AI brings a breath of fresh air to things. I think it could be an exciting tool for advisors to partner with their clients on. I think we might be a little bit away on that, but we'll see what happens. There's great technology out there. If there's money to be made in it, they'll push it, right? So we've embraced technology tremendously throughout my business and always have. We're a big spender on technology. We find it's really a good way to engage the client with their own money, and that's what we want to do. So I think that works out great. Something that does concern me a little bit is the consolidation that's going on in our space. I think the investment advisory space is one of the rare industries that is growing and contracting at the exact same time. And what I mean by that is the forest of advisors out there, there's now really just a couple handfuls of giant sequoia trees.
Right.
And then next to them are some big trees. And then in the distance, there's all these little trees and shrubs. I remember when I first started in this business, I thought, boy, if I could get to 100 million, that would be special. And then I thought 250 is the new 100. And then I thought, well, 500 million would be great. And then when we crossed $1 billion, I thought, well, okay, that's wonderful. And while personally inside our group, we celebrated that, the truth is we find there's fewer and fewer firms like us out there. You know, there's been all these strategic partnerships, private equity entered the picture, and has really, you know, created consolidation. My guess is that consolidation continues. It's not all bad by any means. In some ways, I think it's very healthy, but I do think it creates a tougher barrier to entry. And that's the part that always worries me, because I think an industry can continue to thrive and be creative and develop. You know, things like you guys are doing with this podcast and bringing people out there to really show. I love stuff like that.
Thank you.
And it's because I think it's so valuable for an industry to grow. You don't grow unless people can share ideas and have new spirit and new innovation. And what I worry about with all this consolidation and a higher barrier to entry between the excessive compliance demands that keep building a higher wall every year, you know, people are just afraid to start a business like this unless you can afford a really good securities law firm to act as your compliance officer. It's pretty tough. And then the technology cost, that's another very tall barrier wall of entry. The requirements of how you even report on client portfolios and what you show a client and how a client can see this, that stuff isn't cheap. So it's really hard, I think, in our industry now to get new entrants. And I worry about that because I think that's the lifeblood of an industry, to keep new ideas, new energy. So I think, you know, listen, in the end, I think people will always want an advisor or at least be able to have one. And the reason why I say that is because I think in the end, we all want a better life for our children. And if we do, you better save some shekels, right? I mean, you gotta put some money away. And as long as the government's it's not cheap. Kids are not cheap. I mentioned I have these twins that I just took off to college for their junior year. And I saw an article on CNBC and it was, you know, what are the costs to take your son or daughter to school? And I was thinking to myself, wow, those are entirely different costs. I think the cost to take my son to school, and I would encourage people, if you have a daughter and a son, the cost to take your son to school, take that number and multiply that by about somewhere between 100 and 2,000. And that'll be the cost to take your daughter to school. It's just a little more expensive, particularly if they're at a sorority, by the way.
Right. Yeah.
But no, anyway, the truth is we all want a better life in the future. We all want more, and that helps our economy go, right?
Yeah.
And it's not always, consumption based. Sometimes it's just safety and the know-how that you can rely on yourself instead of a job. I think is a valuable piece that all of us want. And because of that, ultimately, I think there'll always be a role in the advisory space. I just want to make sure that it's always fiercely independent. Being a fiduciary is something that's really important to our team, and hopefully that always continues to exist.
Yeah, and you know what? Because our next question was delving right into the AI sector. And Ashley, I'll let you get into the next question there. But beforehand, I wanted to backtrack. You had mentioned something about the consolidation that was going on a couple minutes ago. I don't know if you've been reading about the news that's been going on with Goldman.
Yes.
Yeah. What do you think about that?
I think it's really interesting that they're kind of looking to sell off United Capital that they bought, right? And relabeled it Goldman, Private Wealth Management. I don't know. On one hand, it might be all the compliance risk they simply don't want. On the other hand, that's a heck of an annuity engine to give off if you don't want that. And they can certainly afford top talent legal-wise. So I don't know. Listen, the powers that be that started that firm, I guess their kind of required period of employment is ending. And some of these chief people that were drivers of this and really ran it are leaving to do other things. A couple already have.
Yep.
So, maybe it's just Goldman decided, hey, we'd rather play a role in the PE space of investing in these groups than owning our own. They're going to continue to offer private wealth management, but they are spinning this piece off. It is interesting. I'm not sure why that is. My guess it's one of those two ends of the spectrum. Maybe it's somewhere in between. It could be something I'm not thinking of. But I don't know. They have their reasons for some reason. It seems odd to give it away after they've helped to develop it and relabel it.
Now, last question I have on this topic: do you think it has anything to do with the thriving DJ career of Solomon?
I hope so. I think that would be great. I love that idea, Mike. That would be cool.
Gosh, that's funny. Ted, what do you think is in store for the economy? In the near term, the long term? I know we've seen the economy go through a lot lately. Can you provide your insight on that and, any opinions that maybe could help our listeners make some more informed decisions?
Yeah, I will tell you, I always describe myself as the most pessimistic optimist you'll ever meet, right? I am 100% bullish on the long term, right? And it's because if you look through the past, those classic charts that are always available of, what this country's been through, what our economy's been through as a result, and ultimately what markets do during those periods, we've always recovered to higher highs.
Yeah.
Mm-hmm.
I am always very concerned about the near term. In this case, there are a few things calendrically that you can kind of take a look at and be a little worried about, right? 2024 is a national election year. And in 2025, our entire tax code sunsets. So that in and of itself brings a tremendous...
Can you explain the tax code sunsets there?
So yeah, the Trump tax policy is all set to sunset in 2025. So whoever does win this election is going to shape what our tax policy looks like.
Gotcha.
And that, I think, takes what elections already provide, which is an uncertain future until we get past early November. I think this particular cycle has a chance to be a little more volatile than normal. Add to that all the things that are going on. Now, there's always stuff going on now, but in this environment, there seems to be a healthy amount of it. And truth is, whether it's someone's left-leaning or right-leaning, I don't think either side is particularly thrilled with the candidates that might be at hand in this coming election. So, it brings about some uncertainty and some upsetness, if you will, on both sides. And I think that creates some added volatility. Add to that global unrest, pending recession, higher rates. This country's never really been through this experiment that the Fed is taking us through with these record rate hikes, right? 11 of them so far, and there could be more. 5.25% hikes. That's a lot to digest. And at the same time, trying to shrink a balance sheet. We'll see what happens, but there's a lot of debt in our own country. We have 43 million Americans that are going to start to pay student loans again. That's going to diminish, not necessarily directly from the stock market, but certainly from consumption side, if money is going to be used elsewhere.
Right.
And on top of that, we just crossed $1 trillion in credit card debt. So, listen, reserves are high to counter that. I think that we'll see where we go. I mean, I do think housing is very expensive. And I think there are some things in the near term that are quite alarming and a little concerning. In the end, I always think it's a lot safer if we can look at things by zooming out, kind of taking your thumb and index finger and zooming out and looking at the broader picture. And at the broader picture of this, there's a lot to be excited about from an investing side. AI is the new .com, maybe exponentially. There's a chance to invest in a tremendous amount of growth. The Ukraine war hopefully can't keep lasting forever. And there's excitement on the electricity side of things in terms of, reducing emissions and us all chipping in to do the right thing in that regard. So I think there's a lot of good news out there. I just think now, maybe in the near term, it's really important to avoid the temptation to time markets. It's really important to avoid the temptation to try to pick that winner in the AI space and instead maybe be a little broader on it.
Right.
And I think the idea of always being patient and efficiently diversified, not diversified towards mediocrity, but efficiently diversified, I think will win out in the end. I always like to tell clients and remind my team all the time, in the end, as investors, we're left to control what's within our control. I use the analogy as to when my kids started driving, as a parent, you worry about that. So what do? You put them in a fairly late model car so that it has all the bells and whistles of safety, right? 3-point harness and anti-lock brakes and airbags everywhere around them. And you beg your kids, please don't text and drive. And of course, don't drink and drive. And all those things do not preclude them from getting in an accident, right? It doesn't avoid that. What you hope it does is just keep them alert enough to avoid situations, maybe steer clear of it. And if something is unavoidable, maybe don't take it head on. And I think as investors, that's what we have to do. Don't pay commissions. Try to limit what Uncle Sam gets from your life every turn you can. But reduce expenses to institutional levels and stay disciplined and committed. And when you have new capital to invest, always look for a more value-driven entry point, right? Don't pay premiums. And I think if we continue to do all those things and make sure this all ties to your own financial plan, make sure all this is customized to you, then I think you've just controlled everything that's within your control, and we're left with that, we make plans and God laughs, right? So we hope that it works in the end for that better and brighter future. And I think that's really all we can do as an investor. And our job, we always take very seriously at Halpern Financial, is to make sure that we keep our clients on that disciplined path, right? And remind them to zoom out a little bit. The near term is always scary. The long term is fruitful. So look for opportunities.
And what do you? And let me ask you this. I wanted to. At what point, when you said that there's $1 trillion in credit card debt, at what point do you think that these home prices are still inflated to some degree? I know even here in Arizona, I always said that Arizona kind of reminds me of a penny stock, right? And but I know even here we've gone down more than probably lots of other states. But still, even here, I don't even think it's hit 20%. And
Right.
so, in your opinion, do you think at some point people are going to start trading in those 2.5% interest rates and taking these 7.5 to pay off credit card debt?
Mike, I think you hit the nail on the head. I think right now the inventory of housing is so low, and it's because really, if I could take myself back, 15 years, and I've got this young family, and we maybe need a little more space from the house we're in, and we want to build out to a bigger home. It's hard to give up a 2.5 to 3% mortgage that's fixed for something that's going to be closer to 7.
Yeah.
The affordability plummets. And that's why the latest, I think it was the Freddie Mac study that just came out, where we're at a 4-decade low of affordability for housing. And I think a lot of people are looking at this like, well, I can't really leave my house right now because, A, if I move up, I can't really on a monthly spend do better than where I am yet.
Mm-hmm.
Eventually, whether it's their debt, Mike, as you pointed out, right? Variable interest debt, student loans, credit cards, things like that, or whether it's just a desire to finally move on and expand. Eventually that wins out. Also, eventually rates start to come down. My guess is we're in that kind of purgatory moment where we don't have enough people moving, and it's because their rates are great. And even those that didn't buy a new house or do something different, they likely refinance to these lower rates.
Right.
And even though they'll take it on the chin and pay a little more in some credit card debts or student loan debts that are coming due, that'll probably reduce consumption enough to slow our economy. And the old expression, don't bet against the Fed, I bet you wins again. And the Fed will likely win in what they're trying to do, which is slow things down. And when we get this slowdown to occur, that's when rates start to cut again. Sadly, those that are capable and can afford enough are the ones that thrive in those environments, right? It's not broad-based. It's kind of like I always remind people, think about it, when we go into recessions, the next earnings cycle that comes out, you discover that companies like Tiffany and Saks, tend to have pretty good retention of shoppers. Whereas, the Walmarts and the Targets suffer a little bit more. And it's because, people have to spend less, right? And restaurants suffer and things like that. But yeah,
I never thought of it like that.
I think the Fed will win in this near term, eventually in the near term, whether that's 6 months, 9 months, 12 months, somewhere in that realm. We'll probably see a significant enough slowdown to get a recession. My hope is that it's shallow and not long-lived. I do think people suffer a recency bias, and when we hear the term recession, we've all been through a lot in the last, cycle between 08, 07, 08, 09, and the pandemic recession. Those two were monstrous. That's not normal. Those are not normal occurrences. A typical recession is not nearly as bad as that. And I think we might just see that typical recession pop up. But it's an uncertain future with this election and tax policy. And I think everyone is a little concerned as to what will this experiment that the Fed is doing. So far, it looks pretty good, right? They seem to have contained inflation and even dropped it considerably. But a huge measure of that inflation is housing prices, and those are not budging at the moment primarily. My guess is eventually they start to. And it's because the Fed will ultimately win in what they're doing always. They're the ones that print the money. Don't bet against them.
Thank you. I really appreciate that answer.
Oh, my pleasure. My pleasure.
Yeah, so I guess we'll kind of end off here. I think, Mike, you wanted to ask him about exciting investments coming up. I'll let you handle that. I know you were pretty excited about that question.
You know what? I actually, for some reason I thought that you're gonna gaffle that one from me. For exciting investments, what investment sectors and maybe some ETFs that you're most excited about right now? I know that you talked about AI, you talked about electric cars. Anything else that you would recommend right now? Or
so that's an interesting climate too. I think we're in this purgatory moment for that too, and I'll give you 2 examples. One is in the pharmaceutical space. We've all seen, friends or people on Facebook that are clearly using Ozempic or Wegovy to some degree. And these
Right.
drugs are, they're exciting. Listen, there was a recent Wall Street Journal article where they think it could save as many as 30 plus million Americans from cardiovascular disease and type 2 diabetes, So there's huge promise there and massive spend going to those drugs. But at the same token, if they are successful in that space, what does that really mean for other pharmaceutical producers that make type 2 diabetes drugs? Or drugs that have to do with statins and things for cholesterol and high blood pressure medication. Listen, we all want those things to come down and be healthier society, but the reality is, from a market standpoint, you're going to have a big section of pharmaceuticals that are going to get hurt with less
Right.
spend.
Mhm.
At the same time, you have a few star performers really rise. I think the same thing with electric cars, as we were talking about earlier. There's a couple out there that do phenomenally well, and there's some that are so early on. It's such an intense capital drain to start a business like that it could be a really long time before they have earnings. I mean, we've seen Ford really struggle with stuff like that despite
Yeah.
massive investment.
Mhm.
GM, same thing. Tesla's done very, very well. But there are other competitors to them that are coming on, whether it's Polestar or Rivian or things like that. There's others out there. The new Cadillac SUV certainly looks attractive and can carry a much longer kind of, I'll call it gallon per charge, if you will. And they get a lot more mileage per charge. So it's very attractive. But at the same time, there are others that are really struggling and could really struggle with this higher interest for debt financing that they have. So I even think in those two sectors that offer such promise and such excitement, there are companies out there that are really going to struggle or fall off at the same time. And if we zoom out, that happens a lot all throughout our history. The dot-com craze created instant, millionaires for some of these companies, easily millionaires, some billionaires.
Yeah.
But then in the end, there's very few that really survived. And unfortunately, there was a big bubble burst to that. It was too much, as Greenspan put it, right? The false exuberance or the over exuberance. I forget the exact term he used, but the idea being that happens regularly in markets. And because of that, making sure that you have a significant amount of your portfolio in index-like investments, more of I hate the term passive because these things aren't passive. They change based on who's succeeding. But make sure that you adjust to holding a healthy percentage in efficient indices, which can be owned in ETFs, and maybe focus on that value side a little bit more. Remember, the household that's going to survive this upcoming recession, if we ever get there, is the one that has consistent earnings, healthy reserves, a good income. Well, if that works on Main Street, it also works on Wall Street. And because of that, maybe own companies that are big enough to withstand this. A lot of those value players are very attractively priced. After all, this run that we've seen this year has been very concentrated to those real tech drivers that have done well. So buying the NVIDIAs of the world, listen, I don't have the confidence to buy that stock at their PE multiple right now, ever.
Yeah.
But
Yeah.
I think it's a great company. It's just I wouldn't buy it right. Instead, there's huge swaths of the S&P 500 that have not done well at all this year that I think are
Yeah.
primed to do pretty well. So the value side of the S&P, I think, is attractive. Things like that. I think this is a safer way to play this interim period we discussed that probably holds a fair bit of volatility left in it. Even if it ends up rising between now and the election next year, I think it's going to be a bumpy road to get there.
Right.
Yeah.
Well, Mike, was there anything else you need to ask Ted today? Otherwise, I feel like we could talk forever. I really am enjoying this.
Well, I like to talk about stuff, so I'm happy to. In fact, we could go back to the party you had the other night, Mike. How was that?
It was phenomenal.
Good.
Everyone had a great time. I recently just moved to in here in Scottsdale. You have North Scottsdale, South Scottsdale. Scottsdale itself is very, very large. So
Yep.
I've moved more into the city, and I'm really enjoying it here. So
Well, Mike, I want the invite to the next birthday party. I really do.
absolutely.
Glad get you on the list there. You can take my
I
spot.
appreciate it.
It's actually fun.
I'll force you to go. If me and my wife are
there-
coming, you got to come, Ashley.
If you and your wife come, I will definitely go.
Absolutely.
Well, Well, thank you so much, Ted. We really enjoyed our conversation today. I really appreciate learning a lot about your success strategies. You've had a lot of great insights to share with us and our listeners. So we really appreciate that and your time today. And to all of our listeners in our audience, thanks so much for tuning in to another episode of the What Matters podcast, where we discuss what really matters in finance. Thanks so much, everyone. Have a great day.